Stocks remain under pressure, but Bitcoin decouples and starts to catch a safe haven bid similar to gold. Trump starts to target the Fed as Powell holds firm on inflation concerns, triggering capital flight out of the US and into other alternatives like Bitcoin. And skew flips back into call premium as investors see improving technicals and potential for a gold-style break higher in Bitcoin. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larka from Options Insight. I've got my man Dave from FRNT, and today's special guest is Henry Duckworth, CEO of Agridex.
Lovely to meet you.
Good to have you on the show, man.
Yeah, welcome, Henry.
Well, so we've got lots to talk about. Your business sounds super interesting, but before we get onto that, quick macro update. What's been going on this week? I've been out for a couple of weeks, so tell me.
Yeah, you have, yeah.
What have I missed, mate?
Oh, not much. Just the financial system as we know it.
Crumbling down.
Crumbling. No, I mean, look, the story, obviously, for the last couple of weeks has been focused around tariffs and the uncertainty that that's creating. Mm-hmm. The latest little salvo has been this sort of ramped up pressure on Jay Powell that Trump's doing.
I mean, he called him a loser, right?
Yeah,
What's that about?
Yeah.
It's like, are we in a schoolyard here?
Yeah, I know. It's just Trump, right? We're kind of getting used to that. But look, it's in an environment where we're kind of questioning the US credibility. I think Jay Powell has kind of, I guess, probably been seen as like the one of the adults in the room.
Yeah, steady pair of hands.
Yeah, and there's obviously, if we think that we're going to lose that independence from the Fed. And I mean, I'd question how independent they really truly are in a way.
Agreed.
But symbolically, it would be a big thing, and it's just kind of fueling this kind of anti-US trade, if you like. But I'm still of the view, and I've had different arguments around this. I'm not bought into the idea that there's this huge kind of sustainable move away from the US. I think we're seeing a global de-risking because we're looking at global recession risks. And we're seeing this global de-risking where you sell everything. But the US run like a negative net foreign investment position with the rest of the world, right? i.e. more foreign investors own US assets than US own foreign assets.
Right.
So when everything's being de-risked, you do see equities lower, bonds lower, and the dollar getting weaker. So everyone's kind of, flipping out on this idea that something significant has changed. I know it looks that way, but I'd say it's too early to say that. I mean, are China selling treasuries and dollars possibly, and we might find out that's the case. But I still feel now it's probably more of a broader de-risking trade because we've got global uncertainty. We're kind of pricing global recession and those fears. So, and when we saw something similar in like 2008, we saw something similar in 2020, where actually equity sold off and the dollar initially sold off before coming back. But anyway, I think that's what's kind of driving everything.
Interesting to see Bitcoin decoupling a bit from stocks though, right? Yeah. Because gold has gone mental. I mean, I can't believe gold has jumped another $200-300 in no time.
Yeah, well, I've always argued on this program, right? Bitcoin covers like both towers of the risk distribution. Yeah, it's the kind of ultimate risk on right towel by everything.
High beta risk
asset, but it's also the far left hedge against disruption of economic and political structures, and we're definitely seeing that now. Gold's obviously the cleaner play on that, and you've been seeing that and money flowing into gold. I feel like Bitcoin's kind of been caught between looking down at what risk is doing, but also as this kind of borderless, non-sovereign asset.
Like dollar alternative.
And dollar alternative, the anti-dollar type trade. I think Bitcoin has kind of held in pretty well, and there's signs now that it's starting to kind of really focus on that side of things, particularly as the dollar keeps selling off and getting weaker, particularly as we start to question Fed independence and all this sort of stuff. It's right, okay, what are the alternatives right now? And the other thing I always say about dollar is it's still probably the cleanest shirt in the dirty laundry of fiat currencies. So outside of that, there's still not great alternatives. So you look to gold and you look to Bitcoin.
It's becoming a consensus short though now, right? Everyone hates the dollar now. So you know, if you're a contrarian, it's probably not a bad time to look for a dollar bounce here, I would say. Right?
Yeah, and who knows as we keep this kind of global de-risking, but I think once if volatility carries on as it is and there's false margin calls, like you've still got a whole world that you've got something like $17 trillion of debt issued outside of the US that needs servicing. And when everyone's value of the assets, which is the collateral that underpins that debt, is going down, the margin call comes in dollars, and then there's a scramble for dollars. And then the Fed are forced to flood the market with dollars. Interesting though for me is if you think a longer term in terms of what it means for equities, like usually currency in weeks when you're having a slowdown acts as like the automatic stabilizer. And when we're looking at a global sort of slowdown, all of the other currencies are essentially getting stronger against the dollar. So the stabilizer is actually for the US. So probably looking forward, we'll probably see US growth outperformance because of the weaker dollar. But also what it means, and what I think is really interesting for Bitcoin, which is exciting me, is you're now in this kind of positive liquidity cycle whereby all the other central banks are able to start selling their domestic currencies to buy the dollar, to essentially sort of slow down the rate of appreciation of their own currencies. And that's like an explosion of liquidity, an explosion of M2 and global M2 in the system. And we all know, we've all seen the Raoul's chart of
yes, so you're talking about Bitcoin. Financial condition easing.
Yeah, basically. So it's kind of the reverse dollar wrecking ball. You know, we always talk about the dollar wrecking ball and how that tightens global financial conditions and is negative for Bitcoin. We're kind of seeing that in reverse, which actually I think Bitcoin is now starting to sniff that out. And I think we're going to have a pretty sort of rapid move high.
Interesting. All right, cool. Lots to watch in the space.
Yep.
But let's get on to you, Henry. So tell us, a little bit about sort of your background into crypto and what you're doing.
Yeah, sure. So it's really interesting. You were talking about Bitcoin kind of almost being an anti-dollar bet at the moment. I think my my history with crypto came from an anti-dollar bet as well, but it was more anti-Zimbabwe dollar bet. I grew up in Zimbabwe, where we had a sort of economic collapse. And what that meant is there was this terrible inflationary pressure on the currency we had.
So you're a trillionaire.
Yes, I was a trillionaire many times over as a kid.
On the show, there you go.
And I think $1 trillion bought like an egg. You know, it was not a very powerful currency. But what that meant is that when digital assets were first being introduced, in 2012, 2013, 2014, I think for a lot of people they were kind of science fiction. But from where I was, where our currency was a total fugazi anyway, I was happy to look at it and to kind of accept it as a premise. So that was kind of my origin story into crypto. And then it kind of drew out when I became a commodities trader at Trafigura. We were involved in trading commodities. They sent me out to the Democratic Republic of Congo, which is a very difficult place to be. Wow. And I set up the Cobalt book there. And if you've ever done business in a terrible war zone, you understand that there's some things you can help and some things you can't. You can't help the local warlord. You can't help the broken ports. You can't help the bad roads. But you can help some of the legacy infrastructure that exists. And the main ones that you can help is things like settlement and smart contracts. You can remove the need for unnecessary documentation, and you can bring in a better system of settlement than the legacy banking infrastructure that exists. And that was kind of the beginning origin story of Agridex. I wanted to set up a system that allowed you to be able to trade real world products, but kind of leapfrogging over those legacy infrastructure issues that exist, especially in the emergent world. And that's what Agridex is. It's an easier way to trade agriculture.
Nice.
That's super interesting. It's funny as well, like what you're describing and that experience in Zimbabwe. It's like crypto must almost seem like pretty
yes, like almost low risk,
low vol currency.
It's exactly I'm very used to volatility. I mean, we were just chatting about the market off screen. And I was like, listen, I've gone in heavy on a short, and you were like, oh, I don't know if you should do that. I think I'm a risk on guy. But no, you're right. It was definitely a time where there wasn't a huge amount of property or land rights. And I think the other exciting thing about crypto is, at its best is you can take your value on a little USB and take it across the world, and you can feel you have ownership, your wallet, your keys, which is another thing that I really, really enjoyed about the community.
When did you first kind of hear about Bitcoin? I mean, again, we were talking about like the pushback I often get around crypto, Bitcoin, is and the ability to send payments and control and custody your own Bitcoin and stuff. Is people like, well, things over here work pretty well, right? I could send you £10 right now on a thing. Obviously,
because it's not a Barclays to Lloyd's problem.
Yeah. And it's weird as well. Like when I talk about currency debasement and inflation, like in the Western world, it's a lot more subtle, slow bleed that people don't immediately kind of feel, I need to go out and buy Bitcoin to kind of protect myself against it. Happens over time. We see it in property and we're seeing it in rising inequality.
Seeing it in gold now though, right?
Yeah.
Gold rising the way it is essentially all currencies devaluing at the same time.
Yeah, exactly. Right. But that gold's been rising over over decades, right? But it's just when it's slow, no one kind of realizes it. And I say, I go back to property and things like that, but that's actually just currency debasement. But when it all happens all at once, and it becomes very obvious, then panic sets in. But you obviously must have had first-hand experience of that.
Yeah, no, I think it's interesting because we are going to this like kind of multipolar world, and there's great benefits to that. But one of the drawbacks is this increase in risk. And I think there's a really interesting point around, so a lot of our products are used in Africa. And for the last 30 years, it's been this great period of economic growth and development and democracy. But if you look from, say, 1960 to 1991, across all African countries, there was never a free and fair election or free and fair handover of power. For 31 years across 653 sovereign nations. And we're almost reverting back to that in a lot of areas. Like we are in an area, I think, of more risk. And because of that, I think digital currencies are having more and more of their day in the sun because people don't want to trust local currencies. And there does feel like there's something better, whether that's because of USDC stablecoins or whether that's because of Bitcoin or Ethereum or various other things. There are other options for than sitting in your local currency. And I think that's becoming a more and more compelling thing, especially in the emergent world.
Yeah. And I guess in not being able to trust your local currency from an inflation stability perspective, there's probably also risks, I'm assuming, around trusting your financial system locally. So with what Agridex are able to do, I guess you kind of almost taking that out of that kind of local exposure and sticking it on a blockchain, which becomes borderless and all this stuff.
But it's totally that. But it's also this idea of friction. Like not a lot of people realize, but if you speak to a trader in India or an exporter in Peru or whoever, they always have 2 to 3 guys in the office, and their sole jobs is to just wait in banking queues. They send out a guy, and he arrives at 9 a.m. in the morning. By 6 p.m. he's done one payment. The other guy's done a secondary payment. I think people underestimate just how badly run a lot of these state and large banks are across the world. Basically anywhere outside of Anglo-Saxon Europe and North America, it has a level of friction, and it keeps on going up the poorer and the less developed the country is. Like my dad's a farmer. I'm from a multi-generational farming family, and he has a guy on the payroll, and his sole job is to go in and deal with the banks. He's not very well paid. It's a huge waste of human capital, but that is his job. From 9 a.m. to 6 p.m., he's in the local bank places trying to make payments.
So what type of entities then are your clients on your exchange then?
It's an enterprise solution at the moment. The grand vision is to help everyone, to give everyone this level of access, but it's unnatural to be able to afford and make this totally open plan. So it's really typically think about, let's say like a producer, a trader, importer, exporter with more than $500,000 of volume a month. That's the sort of people we're going for. Because the cost to onboard and let somebody deal in our system is the same whether they're doing $1 billion of trade or whether they're doing $100 of trade. So whilst we want everyone to use it, it's a cost benefit analysis.
And the contracts are not standardized contracts. They're more, you're matching people off with some physical commodity that someone wants and someone wants to get rid of.
Exactly. You're an exporter of cocoa in Nigeria. What's your problem? You've got a volatile currency. You lack access to end buyers. But this is probably almost the biggest sell that we have. The Digital Enforcement Act a couple of years ago in England allows you to be based in English company law through smart contracts. So by using our system, you have a non-volatile USD currency. But the most exciting thing is you're based in English company law. So if you're an exporter from Nigeria to India of cocoa, but there's a dispute, they can take it to the courts in the UK. Or at least that they can. That's the premise. So that's something that's very exciting. And a lot of people enjoy that.
Okay, and that's bringing and how long have you been doing this?
So we started building it 2 years ago. We started putting flow on last year. One of the first things we did was we did the trade of a royal bull. So from Gatcombe Park.
Bull, as in an animal. Okay.
Like an actual bull. Right. It was from Princess Anne's stud. And it got sold to a farmer that I knew in Dorset. But I was so excited. I thought it'd be so valuable. I actually now own it. I went round later on.
Bull.
Yeah, I bought it.
By the way, can you fractionalize that?
You
bull?
can.
Oh my God.
And I think that we were planning to. But that was one of the first trades just to see if it worked. But then we started doing things. We did wine. We've done sugars. We've done wheat, oils. So there's a range of different commodities that are now on chain. We're agnostic. We did a big one on coffee. So we're adding more and more commodities as we go. But it's much more about the companies than the commodities. Anyone can trade on it. It's more like, are you the right kind of exporter? Are you the right kind of importer? Will you get the benefits of using our system? Because as you guys said, there's no point. If you're in central England and you're trading between a friend down the road using your Barclays bank account, at the moment, there's no value add from what we're doing.
Yeah, and if you're set up to trade like agricultural futures on the CME or whatever, then you're not going to be a client of yours, are you?
Exactly. Right. I mean, long term, when we're large enough, you might come to us for information because you want to know what the flows are. But yeah, at the moment, there's no need to talk to us.
Yeah. Okay.
And then so, like, from my understanding, you're really supporting all aspects of that trade. So trade financing as well.
Yes, yeah. So thanks for asking. Yeah, so a big one for us going forwards is trade finance. I think, as we know, there's so much risk capital in the world of crypto out there, but it often doesn't have a place to go that's real. On the reverse, you have these institutional traders out of emerging countries. They've got quite large books, all of which would pay debt of 1% a month. You can pair people together, and suddenly there's an opportunity to create yield for crypto holders on one side and to create trade lines on the other for these various groups. I think more and more we're seeing a lot of these ridiculous yield levels being shaken out right in the world of crypto. Whenever things get a little bit slower, suddenly these 50-60% returns that were offered by these guys, it's no longer in existence. And I think more and more there'll be a drive to value. So I think we're seeing a lot more uptake at the moment with people who want to route capital into some of these trading opportunities.
Yeah, and you're using USDC currently.
Yeah. We're agnostic.
Yeah.
It's just USDC have been the best home for us. We've got a Circle Mint account. We've got great links to Circle both on the foundation and the company level. So it's been a great kind of experience so far. But I guess as we grow, we'd be looking to work with other partners as well.
Yeah.
Amazing.
Yeah.
So you've got an interesting vantage point just generally in crypto and the industry. So, being a business builder, looking at how things are playing out, have you got any strong views about the way, what's going on politically is impacting crypto, and also this kind of dichotomy between Bitcoin and then everything else within crypto, right? Bitcoin seems to be very much emerging as the safe haven potential asset. There's been a lot more institutional adoption potentially, whereas everything else is just in a bear market.
No, you're right, and it's funny. Bitcoin very much is Trump at the rallies. It's Trump in the election, which is like everyone pretends to hate it, but it sucks up so much oxygen it ends up getting in. Bitcoin's exactly the same. Everyone's like, why is it this value? It's like, well, because everyone else talks about it. It's self-perpetuating. I think some of the other winners. Obviously, we're built on Solana, but I do think Solana is going to be one of the other winners of this cycle. It's dropped down quite a bit, but so is the whole market.
And what was the reason for being on Solana and not Ethereum for you?
Well, it was just that there was no one at Ethereum to speak to when we decided to go public. I wrote to the 4 or 5 biggest chains. Everyone came back to me, and everyone came back with an offer. People really saw the vision of what we were doing, but it was Solana that provided the greatest support in terms of help, in terms of vision. I got to meet Anatoly, the founder, very early on. He got what I was doing. Yeah, there was just that level of interest in building that I found superseded anyone else. But also there wasn't. I think this is Ethereum's problem. It's incredible technology, but there isn't that level of support network. Who do you go to? Who's the guy? I mean, Kissinger said this about Europe. He said, when I need to phone Europe, who do I call? You could say the exact same thing about Ethereum. When I need to phone Ethereum, who do I call? Because it's definitely not Vitalik. He's not picking up phone calls.
But that's a really interesting perspective and insight because, this is a challenge that you've faced as someone trying to build a business in the industry, and you've chosen Solana for that reason, right? It does speak volume. I mean, I think the the amount of money staked on Solana just overtook Ethereum as well. That's what I read.
Is it that much now? I didn't realize, because that was
nearly 60 billion or something.
That's incredible, because that was almost like the one concern that we had is because Ethereum had such a longer lifespan before, there was so much more institutional capital there. That was probably the only consideration we had, against it at the beginning. But it's amazing to hear that that's happened. I didn't know that that's the case.
Yeah.
Yeah, wow. It's pretty. Joe, I love about this and with what you're doing, Henry, is like, we speak a lot around trading, and a lot of that's numbers go up and down on the screen, and then we talk about Solana price or whatever, and to actually see like those real world use cases of how this is actually, going to really impact like people like around the world, and particularly in the places that need it most, in some emerging markets and developing countries.
Yeah,
it's just it's kind of mind blowing just to see the impact that this technology is able to have in facilitating that trade and those trade.
No, we're definitely in that next cycle. I mean, there's 193 countries in the world. They all import and export food, so the need set is huge in the world of agriculture. But I think it's now superseding just trade flow, right? There's so many tracking mechanisms that put on blockchain. I think soon they're going to be having voting systems built on that. I think we're now in that cycle of real adoption. Whereas I feel like in the last one it was a lot of excitement. But how many really good projects stood the test of time from the last one? So many got shaken out. Whereas I think a lot of ones that are built at the moment will be here in perpetuity. They're not going away now. It's not as sort of
and I think like this is kind of the next like stage of the evolution for crypto is like, I mean, I'd argue up to this point, really, like stable coins have been the only real kind of product market fit.
Yeah.
And then obviously Bitcoin, as this, digital capital or digital property, scarce asset, and that's playing a role there. But it's now kind of really, and there are other examples as well that we could kind of highlight. But having these real world use cases, and it needs to almost as well progress to where people are using blockchain in a way they don't feel they're using blockchain. It's just a marketplace.
That's exactly what ours was built to be. Like it's Web 2 looking. We're benefiting from all of the great tech that blockchain has, but it's literally designed like that. Yeah. It's designed to look very.
How is it like obviously in some of the places you're going into and are like very remote?
Yeah.
Like is there a big education process like with like farmers and stuff like that, because all of a sudden someone in some remote farmland and you're saying right here start putting your produce on.
They might not be that tech savvy on day one.
Yeah.
Right?
No, you're right. It is. I think sometimes with some of the conversations you do feel like you're selling magic beans at first, because you're like there's this money, it's there, but you've got to trust it.
I will say farmers were like the first original derivative traders, right?
Yeah. I guess so. Yeah, tablets in ancient Babylon, right? Like that was it. Okay, yeah. So no, you're right. I think the reason why we've done it in the emergent world, because the tech can be used anywhere, is because the infrastructure is so bad, they're willing to give it a look, even though they might not necessarily believe in it. Sure. And I've said this before, but like, for example, like Congo was the first country in the world to adopt cell phone technology, even before America. The reason being is it was the only place. So yeah, it's true. The reason being it was the only place on the planet where the elite would pay the equivalent now of $250,000 for a handset, because there was no other way to communicate. So if you were a multimillionaire trader in Congo, you simply could not communicate with anyone else. So when somebody came along with this option, you'd adopt it. And in the same way as like Kenya was the first one to do digital money before anywhere else, they had M-Pesa. That was the first digital money way before Bitcoin or stable coins. So I think in the emergent world, they are willing to give technologies a try, even if they probably don't trust them. Like I have had conversations before where I'm explaining what a stable coin is, and the guy's going, yeah, I'll try it. But you can tell in the back of his mind, he's going, I'll try it, but I'm not really sure.
But that
I understand they would trust it.
But that's exactly, but they're skeptical of their own governments and their own institutions. So it's like, why wouldn't they trust this when they can't really trust them anyway?
Yeah, exactly. Yeah, they're like, but that's why we've never seen anyone use Agridex and adopt it 100% in the first like month. It's like 1 or 2%.
Yeah, testers.
Yeah. No one's coming in, and diving into the deep end. And I think that's partly because people want to see how it behaves and acts.
Yeah, Joe, as well. There's an irony, like I think, with blockchain technology and crypto, in that the people that it more immediately benefits, like live at the polar ends of the spectrum, like people from like very like developing like markets where they lack all the infrastructure, they they battle political instability, can't trust the banks, can't trust like the rule of law,
Currency's depreciating really fast.
all this sort of stuff. They're at one end of it, and then the other end of the spectrum is actually like billionaires, things like people that will get debanked, that want to know that their assets are safe and that
they own them.
Yeah, and they're kind of going, I've got this billions of dollars.
Yeah.
Where do I put it? Like, how do I put it and protect it? But most of us are somewhere in the middle where
No, you're
kind of
right. I mean, I hope to you on the end of one day, but you're right. And, but I think it's also like again. I think Bitcoin's almost taking that away from the luxury art market, because if you look at like certain paintings, that's partly why they were so valuable.
Yeah.
Because if you got invaded or there was some huge issue, you just take out a scalpel, cut it around the sides, roll it up, put it in your pocket, and suddenly you're carrying $100 million on your person. And I think that was always what luxury art was supposed to do. But with Bitcoin, the more it gets trusted for that same mechanism, it's like, well, you can pop that on your USB, put it in your pocket, and move on.
Yeah.
On the currency, kind of protecting your currency and stuff, like how are your thoughts? What are your thoughts about what's going on with the dollar right now in terms of the decline? We've had a 10% move in like a month or so. Like, it's one of the fastest drops in the dollar we've seen in quite some time. And earlier offline, we were talking about the demise of old global currencies. Like, what's your perspective there?
Well, I think, when we were talking off stage, I was sort of saying there's only ever been two global currencies before, the Dutch guilder and the British pound. And they had two totally different experiences. The British pound just slowly degraded every year for like 100, still kind of is today. It's been this slowly walking down the hill, whereas the Dutch guilder just leaped off the cliff. It like snapped in the space of only like 10 years, went from, I think, 60% of the world's sort of settlement to close to nothing. And for me, it's always been interesting because we are going to a multipolar world. I believe in American exceptionalism. I think it will stay dominant, but it is interesting to think whether it will be a slowly reducing scale or a drop. I don't think that there can be a big crash in the American currency, because what are the other options? We were saying earlier, like, there is no office for BRICS. People are talking about a BRICS currency. They don't even trust each other enough to pay the rent. There's no BRICS phone number. So I don't know who would come in as a dominant currency. I think the only other ones that matter really would be the euro. I mean, that's if there's genuine unity from
what if there was like there's tokenized gold, right? What if you could easily transact in gold and you could buy your goods and services in gold, and basically that was the alternative currency? Is that something?
Well, didn't that exist pre-1945?
Yeah. This is the whole thing. And straight away, then you come up against like the debt problem.
Yeah,
like, and needing to consolidate that sort of debt. The reason we broke away from the gold standard
is there not enough gold to oil the engines of global commerce,
and to provide leverage and everything to allow that development. Problem is, obviously, you start going away from that, and then you lose that anchor completely, as we have.
Yeah,
exactly.
And then it's just we can press the print button whenever we like.
But isn't that why Trump's doing this entire audit of all his resources? I mean, you've heard about this. You know that he's got his whole team auditing every single piece of value across America. Isn't that basically to create a sort of wealth bank to show what's backing the US dollar itself? I mean, I thought that's the big kind of thing that he's...
I mean... Hard to know what Trump's doing.
Yeah.
Okay,
from one week to the next.
thing he might be doing is...
Yeah. But I think what he can do is he can look at the amount of gold they hold in Fort Knox. I mean, do an audit of it. Okay, it could cause more problems than it's not.
I think that's a wonderful conspiracy that somebody's been...
there's a lot of gold.
They could definitely revalue the gold, right? Because I think the gold's valued at...
Nothing.
I want to say $40. I forget where it's at.
Is it
but
really?
But it's like they can literally revalue the gold. So the gold's kind of valued, from where it was priced decades ago. They
revalued almost 100x it.
Yeah, and all of a sudden they've got a massive balance sheet that they can go and sort of do a lot of damage with, so to speak. So I mean, who knows? I mean, and that's another thing, for a Bitcoin reserve, that you could revalue the gold, sell a chunk of it, buy
and then go into Bitcoin
and still be like net. We've not had to increase debt anywhere. Net, the value of our gold holdings hasn't gone down because we just revalued it.
I mean, the UK is holding a lot of sort of Bitcoin, isn't it? So it could be to our benefit if there's an increase in value.
How much are we holding?
I think we're one of the biggest holders. I'm not quite sure why. Didn't we bust some Chinese syndicate? That
Yeah, again, just through confiscated.
No, not through bleeding clever.
Smart trading. Smart option trading on Deribit.
Yeah, I mean, we I think we
They took a big debt position on Deribit and it just fucking whipped.
I think we sold our gold at the ding dong low.
Oh, we did. Yeah, that was terrible.
$250 a ton. Under Gordon Brown, I think. It's $250
That's probably good. That is probably the worst trade in history.
Yes.
That will go
And
down.
it was like a lot of it. It was like 5 or 10 billions worth. It was like a lot.
Yeah.
And there's no accountability for that stuff, which really annoys me. But
So come on then. So tell us, what's the future hold for Agridex? Like, what are you doing? What are you kind of working on right now? Where's the business going?
So I think our big kind of aims by the end of the year, outside of sort of boring things like the total volume and stuff, is building out fully our credit facilities, having a link into several of the big debt providers that we're already in conversations with, building insurance and tracking. Those are the other two big things that we're after. It's quite easy to give IoTs on each of the products that you're trading in.
What IoTs?
Sorry, it's trackers. So it allows people to track where products move. So suddenly you're now given a map of all the Agridex goods that are flowing around. You can see where they are in the world before they arrive. It gives you kind of peace of mind. So those are the two big things: insurance and tracking and credit. But to do those, we're kind of going into our next sort of round. We had a load of really interesting investors in the last one, led by Portal Ventures. And we had like the CTO of Goldman Sachs and Citadel, who were the X1. So we had some really interesting people in, and now we're kind of opening it up again to the next sort of round of people, which is quite exciting. And then outside of that, I think, the big thing for us on a personal level is to kind of drive stablecoin adoption in the places where it doesn't really have much adoption. A lot of countries that we're going into don't really understand it, and you're kind of chipping away at their preconceived notions of what digital assets are. But soon it's gonna.
Yeah, but the interesting is, like, you're tapping into another need beyond just kind of currency protection, right? It's to be able to transact in these sort of physical, real world assets, right?
Yeah.
When people have that need, they're more willing to believe and have a go at this kind of innovation, and then they'll see the other benefits of just like holding some stable coins.
Right? Yeah, you're right. It's like what drives it, outcome or need. It's a bit of both, I think.
Yeah. All right. Well, it's been really interesting to have you on the show.
Thanks so much for having me.
yeah, that's been a great
thank you, guys.
conversation. Enjoyed it.
All right. That's it, guys, for this week's episode. Good to be back.
Next week.
Oh, next week is... Well, it's not... Yeah, next week's a big one. So we are super excited because Crypto Options Unplugged is going on tour. So we're going out to Dubai. Token 49 is happening over there next Wednesday, I want to say.
Yeah, Wednesday, Thursday.
Yeah, and we're going to go out there, courtesy of Deribit, and we are going to meet up with all sorts of special guests out there, some of the big names in the industry, including Justin Sun.
Yep, Justin's going to be on.
Founder of Tron, and all kinds of other players in the space. We've got a whole day lined up. We're calling it the Perpetual episode. It's going to be released over the course of May. So we're doing about 18 interviews out there, talking about all sorts of things, crypto related, and getting a bit of a suntan while we do it as well.
Good stuff.
All right, that's
Catch you soon, guys.
Thank you.
Take care.